Max.
Sounds good.
Cool.
We're live.
All right. Well, to all my Chingus here, especially my two here, hopefully you're finding yourself safe from the diarrhea lettuce outbreak of 2026. Are you guys avoiding your lettuce right now?
Yeah, I never ate fresh vegetables anyway. I went to In-N-Out. It was
uh,
great.
well, there's
Oh,
like
you still
a
get
slice of
though,
lettuce
right?
there. Yeah.
Yeah.
That's true. There is a slice of lettuce. That's dangerous. I like being a risk taker.
Yeah.
How about you,
Yeah. It's
Ian?
good.
Are you a big I think Ian seems like a healthy guy. I feel like he would eat a lot of raw veggies.
I don't eat raw veggies usually. I just hate them. I just eat meat. That's all I eat.
Yeah.
Or cooked
Yeah.
veggies sometimes. Yeah.
This is classic Chingu behavior, right? Avoid your vegetables and go stick to the meats. Well, I'm glad that we're marked as safe because we have a lot to discuss this week, guys. I want to begin actually with something that is like personally so exciting for me. So, as someone who is chronically online and I'm someone who is addicted to X, the last couple of years since the acquisition by Elon has been a little bit depressing. It kind of feels like I am in a strange kind of echo chamber of hate on the feed whenever I would get on there, just like conspiracy theories or thirst trap photos and all stuff. Well, some of those thirst traps are nice, right? Because maybe it's deep fakes of Ian and Kevin that I'm seeing there. But like, besides all that, like the a big change has happened actually this week. So Nikita Bayer, who's the I think head of product at X, has made a tweak, and I'll actually share kind of what he said. He said, "We're rolling out a small tweak to boost visibility of your posts to your mutuals, people who follow you back. We noticed this data was missing from the algo, and it made your friends appear less in your replies. This resulted in the reply section feeling more like a battleground of people with people you don't recognize." So I gotta say, we are so back. This actually feels like a much more joyful place, X, than it has in years. And I've actually found that there's a serious like uplift in my own engagement as well. You guys are not on X as much, but have you seen any of these changes? Do you think actually these kinds of almost it feels like a reversion back to pre-Elon feed is going to do anything for this asset to change your view as to whether it's has growth or has any value? I'll start with you, Ian. Actually, if you have any perspective there.
So I was never on X. I mean, I'm on X, but I didn't use it a lot. But it was mostly because the feed was really crazy, and there are a lot of scammers and bots on X. But if this changes, what I see on X platform, I might try it as well. I was thinking about actually start doing it, but it's just I don't know. Like I don't know what you use in terms of your social network, Kevin. But I think Kevin and I are always on Instagram and you're on X. So I don't know. It's just a preference thing. X is just a little too messy for me.
Well, actually, I want to talk to you, but I'll get one follow up on you on that, and then Kevin, I want to hear your strategy here too. So, like Instagram, I know you guys both double down on this, but like, why do you think that is the platform that is worth investing in? Because I never could quite get it when it comes to the connection of our industry, but you guys are doing it successfully. So, why Instagram? Why'd you wed yourself to this?
I mean, I love investing consumer stuff, and I think if you're doing more tech and developers, the nerds, you got to be on X. But if you want to be with the people who are hot and hip and leading the trend, you got to be on Instagram. So I love consumer products, consumer AI apps. So that's what I'm choosing to be, not the cryptocurrency scammers platforms.
Well, that's X
Wow.
It's
before
all
this
about
week, right?
politics on X too. Like it's all about politics there. Like that's why I'm
It
not
is.
even on there.
To be fair to Eric, I do think there's a lot of very serious big VCs though that have a very big, presence, right, on X. And I feel like a lot of maybe the more later stage like successful kind of founders and successful VCs like have some sort of like a symbol of pride if they're quite active and have a lot of followers on X. Um, I just think for me, it's just not the way that I I'm not good at it. Like I'm not good at being like quick and witty with like short text, like a short text like whatever write out. Like it I just I'm just not good at, and also like keeping track of that feed and like following everything that's going on. Like in my mind that actually is even more like I don't do TikTok reels, I don't go through doom scrolling. But I think if I really tried to get good at Twitter and get more followers, like I would have to be basically doom scrolling my feed for a really long time every day. And so I don't know, for some reason it just hasn't been kind of the format that I think I'm good at and I like. I think Reels and TikTok, it's just where you can get virality in situations where you do go viral. I've been like experimenting a little bit with short form video content. Nothing's really taken off yet, but I think that's where I'd like to experiment more so than like trying to, because the Twitter thing, like you do have to get into like the conversation. I think you have to
Yeah.
like be part of a lot of different threads and conversations. Whereas like for Instagram, I can just put out whatever content I want. People can look at it. They don't have to look at it. It's fine. It's something that I'm also used to because I've been using it since like college.
Well, your LinkedIn game's quite good, Kevin. And I do see pretty great engagement on the videos. I always look forward to seeing Kevin about to say something like this with his like microphone close to his mouth. Like, ooh, another spicy note coming up.
I totally agree with you on that, Kevin. Like, X, you have to be on X all the time. You have to engage with them, reply to them, talk to them. But to be honest, Instagram, I post my thing and it's done. I don't have to engage with them. It's it's less time consuming from my perspective because a lot of my friends are on X and they're doing very successful game on that. And they always tell me, go to somebody famous and leave a witty reply. That's going to give you a lot more engagement and that's going to get your account get going. But it's just, you have to understand the context, you have to reply to it, you have to respond to it. It just takes a lot more time than me making a carousel and post it and done. I don't care about, how people respond to it. So I think that's the difference.
Okay, here's my final pitch on X. So I love the platform largely because I do like dad joke length quips, as Kevin was sort of alluding to. I'm also a naturally sarcastic person, which actually translates perfectly to this platform. And the last is this. So where I use X is a little bit less around education, although that content can sometimes work really well, but more about just exhibiting my personality because the strategy here is just like if I come off as like this avuncular kind of funny person that still is wholesome and has some reasonable smarts, like you just want to hang with me, right? And that has actually done quite a bit, I'd say, in terms of like helping the brand for myself as well as like the fund. So, but I do, whenever I see your respective contents, right, on Instagram, on LinkedIn, I really like admire what you guys are doing because I do think that I actually get to learn things whenever like I follow your accounts, and you're both really funny too, and also sarcastic. But anyone, to each their own. Um,
Hey, well, how about
so,
LinkedIn? I feel like LinkedIn is becoming a little lame like Facebook.
oh, it's
Nobody,
terrible.
it's
Yeah,
It's
getting,
like fucking slop. It's
I
so
know.
bad, right?
self-promotion. Yeah, it's a lot of spam, a lot of self-promotion. But the issue is there's still like the system of record for like who you are and what you do with your career, right? So it's so hard to like the second you connect with someone or you want to look up something about someone, you always go to LinkedIn first to see what they're doing with their career. And so it's kind of annoying because the content sucks, but the data is still the data layer.
Yeah, it's like just please promise me, boys, chingus, that like you're not gonna be one of those cringy LinkedIn lunatics that are just like, I just had my first baby, and as I looked into her eyes, I thought SaaS sales could improve. That if like you follow these three things, just like that shit just like drives me nuts.
Yeah.
Anyway,
I,
yeah, yeah.
I just think we need a new type of social media sometime soon. Everything's getting lame. Instagram is okay. We're on
Yeah.
Instagram. I'm on Instagram a lot, but it's also very lame. So we need something that's beyond what we have. These things have been around so long and so old. I don't know. We just need a new social network for the AI era. So I'm looking
Oh
forward
my
to that.
gosh. we are going to create the new Chingu app, the very best of this AI native era. So we'll talk about that incubation. We got to probably come up with a couple million apiece. All right, let's do that later, or we'll just vibe code it for nothing. Um, I want to move on to actually some other pieces of news that are not related to SpaceX, Anthropic, or OpenAI. We have heard you, by the way, Chingu's in the audience, your complaints that we only talk about these companies. So we're going to stop doing that, at least for this week. And let's talk about Kimi. So Kimi K3 model. Um, I want to start with you, but here's what I do know. Sorry, you, Ian, because I think you're the one that talked about this May status and this like release July 20. No, no, is that right? No, the full model will be released July 27th. But we've gotten a taste of this, and already people are saying like this could be like frontier quality stuff, an open source model from Moonshot, which is a Chinese business. So this sounds really exciting. And Ian, as you've been sort of interpreting and processing these news, and as someone who's a very active builder using AI right now, like what do you think this is going to do, I guess, with the AI market? Does this have some sort of impact and consequences to Anthropic and OpenAI as well?
So I think Meta was supposed to be doing this, what Kimi is doing. What I'm saying
Llama.
is the open weight, yeah, Llama and open weight, open source models. That's going to help, us to access to these models directly, not depending on OpenAI or Anthropic. But I think Moonshot is doing its role. I mean, the only concern there is it's a Chinese company and it's hurting American AI infrastructure companies. So it's a little bit concerning, but still, somebody has to play this. Otherwise, we're going to be stuck with OpenAI and Anthropic and paying tons of money to them every year or every day. So I am actually trying. So I've been using Claude for $200 for many months, and realized and Claude was jacking up their prices in terms of Fable, and I realized I'm too dependent on it. So I'm actually adding GPT to my tech stack. So I'm paying $100 to Claude, $100 to GPT. I'm going to experiment Kimi soon. So I have 3 agents for each company, 9 agents on my Discord, and using them to do whatever I need to do. So I think it's really good. I am always hope, I mean, wanting to see that, those models become smaller and cheaper and being actually on device. So I don't have to send my data to the OpenAI servers and cloud and or anything. Just have it on my computer for free, running 24/7. And I think Moonshot is helping that dream to come true.
I mean, Kevin, do you think that as these open source models are now becoming actually something that people are noticing and like frontier level, is this going to put some sort of rug pull pressure on like the valuations of the big incumbents like the Anthropics and the OpenAIs?
Yeah, absolutely. I think, I don't know valuation pressure, but certainly business and market pressure. Because I was at this kind of reminds me, I was at a UBS tech conference this week in Menlo, and the like number one, like one of the big topics was, and it's been coming up a lot in other conferences too, is basically like, what's the cost effective way to scale? And it's not about token maxing anymore, but actually like value maxing, right? How do you get the most productivity for what you need at the lowest cost? Because you can't keep, unless you're Meta or Google, like you can't keep burning millions and millions of tokens and spending billions of dollars on tokens, because you have to build, if you're a startup, you got to build a sustainable business model at some point. And so I think open weight, like open source models are definitely important, and also like figuring out how to get your inference at a cheaper cost, right? Because a lot of these companies that are, need to run inference, application companies running their own inference, like they can't be, spending so much money on the hyperscalers anymore. Like they want to have a much cheaper inference provider. And so like Fireworks, Space 10, Together AI, all these companies are growing very, very fast because of that. And I think open source is definitely where I think it's gonna go to open source pretty significantly over the next few months and year. So this is huge. I think the other interesting thing I saw on this one was that after I think Kimi released, the other Chinese like model makers and companies, their stock fell like massively. So like I think,
Interesting.
yeah, Minimax, one of the like the other Chinese kind of AI companies, fell 16%. There's a company called Z.ai. Their stock dropped like 28%. Alibaba, had some kind of things to say as well. So it's just interesting to see that it like they really came out with a big splash in the China kind of ecosystem.
Love to see it. I mean, at the end of the day, like end users like us should win. Maybe investors are sweating in terms of for those who have like a lot of exposure into Anthropic and OpenAI right now because of this pressure. I know we said we weren't going to talk about them, but I do need to sort of conclude with this like one comment. So the rumors I'm hearing really strong, they're really strong right now, are that both OpenAI and Anthropic are trying to go much harder into scientific research, like things like drug discovery and therapeutics and so forth. So this is smart. If they're actually smelling that, like, this kind of like generic like model for frontier model thing isn't really defensible for like a lot of use cases, but maybe we should be deploying a Fable into like curing cancer or something like that. That seems like a really protected way of ensuring that, like, yeah, it makes sense to spend billions on like drug discovery because the upside is like in the trillions. So that will be maybe like something for us to look at. It's just like who gets these ultra frontier scalar models that cost a shit ton of money. It doesn't have to be me, right? Kimi might be able to do it. So we'll
I
see.
think DeepSeek is also targeting for an IPO sometime this year. So we're gonna have Anthropic coming to the market, DeepSeek,
Where are they
OpenAI.
listing?
I think Hong Kong.
Yeah.
Yeah.
Isn't that a dog shit market, Kevin, to list in?
I mean, in Asia, it's where all the Chinese, like all the big companies do. So like for Asia, it's probably the best option.
Okay. Not Australia or anything of those, right? Okay.
No, no, no. I mean, the
Yeah.
only
All
better
right.
option is the US. I mean, maybe you
Yeah.
could argue some European markets, but it's quite hard, I think, for a lot of the Asian companies to go to
Right.
Europe.
Okay. Very good. Uh, Fascinating. Congratulations, Kimmy. We want to see more of this battle happening. But let's talk about, like, let's keep this to this theme of public markets a bit. And Kevin, I want to start with you because I think you brought up this topic when we're planning our real stories today. So there was like a ridiculously huge margin call that took place this week in Korea. Like something you said, something like, was it 3% of Koreans got margin called this
Yeah.
week? You want to talk about like what you sort of heard at a high level?
Yeah. Well, I mean, for folks who haven't been following, like the Korean chip stocks have been on a crazy run. I mean, chip stocks in general have had a crazy run, and a few of the largest semiconductor companies in the world are in Korea, obviously, like Samsung, SK Hynix. And so, I keep getting flack for this, but a friend of mine, another VC, asked me like, "Oh, should I buy Korean stocks?" Like this was like 3 or 4 months ago. And I was like, oh, nah, the Koreans, it's a weird stock market. They love gambling. It's really volatile. And lo and behold, like these stocks have just shot through the roof in the last few months. And so he keeps being like, you made me miss like a generational wealth making opportunity here. Um, but anyways, subsequently, a lot of those stocks have obviously come down from their highs because what goes up must come down. And SK Hynix did go public as well in the U.S. and now they have an ADR that makes it easy to trade. But because a lot of these stocks went down pretty significantly, I think it was I want to say it was like last Wednesday or Tuesday. I think SK Hynix was like down 9%. What happened was a lot of Koreans who love trading stocks basically got margin called. And essentially, what a margin call is for folks who don't know is like you can trade stocks normally where you put a cash into an account and then you just buy whatever say you put $10,000 in, you buy $10,000 worth of stock. But what you can do is you can actually borrow money in addition to that. So a lot of brokerage accounts will let you borrow like sometimes 2x, 3x, even more than that. So you could borrow another 10,000, 20,000, $30,000 on top to actually buy more stock, whatever you want, right? And in those cases, if you borrow $40,000 and your account goes down by 25%, then you've lost $10,000. That's your entire equity or cash that you had in the account. You're going to get called by the brokerage account to say, hey, you need to put more money into this account. Otherwise, we're closing everything up. Like your money's all gone. Right. So that's essentially a margin call. And that happened to 3% of the Korean population last week, is what I heard, which is a crazy number if you think about it, because that's like, it's hundred, it's like million, probably a million, it could be, seven figures of people, right?
Yeah, 120, I mean, 100 million, I mean, a million to 1.2 million people.
Yeah, and
That's a
I
lot of
think that was
people.
my
Yeah.
concern originally, was like, the Koreans, Ian, you probably know more about this, but I think a lot of the Koreans treat the stock market as like a casino and they just love to gamble. And so it's like just really volatile in my opinion, and that leads to very strange market dynamics in that stock market. So that's why I was very hesitant about it. But I don't know, it's just crazy to see this kind of volatility.
Ian, is that like social unrest levels of economic havoc? Like when 1.2 million people are margin call like that, I seem like that leaves them with like nothing, right, in the bank account.
That's fine. A lot of people made a lot of money, so they can lose some of it. It's not that
So
their
that's
entire account has been margin called. So I don't. I mean, I run some of like this group chat that has about 2,000 people in it. We talk about stock every day, and they got scared a little bit, but it's not that bad. Like they have these smaller accounts. They open smaller accounts and do this leveraged products and margin calls. It's fine. We Koreans have been doing a lot of cryptocurrency trades, and this is nothing to them. And I think the reason why Koreans are really so into this stock market or casino is that the social mobility of the society is not as easy or good as what we have in the States. So even if you work hard over there, you have to get older. You have to be old enough to get promoted. Like you have to have some kind of other requirements to do better. And it's a little bit of socialism there. The wage is not pretty much similar to everybody. I mean, they're all rich. They're all making good money. They live a better life than us here in terms of infrastructure and stuff. But then I think the only way for them to move up to different apartment or go to a better neighborhood, they have to make money outside of their job. So everybody's just trying to do something crazy overnight, which is stock market and cryptocurrency trade. And I think it just turned out to be chips this time around.
yeah, I think that's a really good point. A lot of gambling behavior in Korea and actually everywhere when it came to the crypto side of things. Now that that's died down, people are putting their bags behind Korean chips. Dangerous game to be playing, folks. I tell this to my son right now, where we're doing a summer of personal finance education. Never to do margin trading. It's like just dump it into an ETF, for set it and forget it, VT or whatever, VU, whatever it is, and then you'll get rich slowly. But he loves his Pokemon cards, and there's a lot of volatility in that market. So he's on his way to being a Korean margin trader as well. Let's go to a different story. So there's this .com 1.0 company that most people have heard of called PayPal, right? One of the great innovators in digital money, right? Formed by Peter Thiel and all those good people. Big news, though, is that Stripe, along with a huge private equity firm called Advent International, have made a joint offer to acquire PayPal for basically like an effective $53 billion valuation, which I think is like I'm seeing it as like a 28% premium over PayPal's closing price as of this week. Isn't this weird, right? Like, so you have this like private company, Stripe, that essentially is buying, I think, one of the biggest incumbents in finance or in fintech. I mean, what do you think is going on in PayPal where they're taking this thing probably quite seriously? Like, did PayPal essentially like completely whiff the past like 10, 15 years or something like this? Because they should be the ones that are harvesting and buying companies like Stripe. I was really surprised by this. I'll start with you, Kevin, to see if like you've been tracking with this and had any reactions.
Yeah, I mean, I don't follow PayPal too much as a stock, but I mean, it's funny because I feel like they're still quietly this like giant behemoth in like payments that people use, especially in probably the rest of the world. I don't know if it, I'm sure it's in the US as well, but in the US, I use a lot of Zelle and Venmo when we have a plumber come over or, cleaners, whatever it is, they always prefer that. But like I remember once I was in Europe for like a taxi cab or like a driver, they were like, "Oh, we take PayPal as well." It's like interesting. I'll pay you on PayPal. I guess it's been a long time. But I think most of us remember PayPal as like what you used to use to buy something on eBay or when you were like shopping on like a marketplace, right? Where you had to pay someone, you used PayPal to send them a payment. And now it's like they're definitely not like a sexy company, but I'm sure they have a pretty big amount of revenues and volumes because they're at least worth the bid was for $53 billion, so it's a big company. Um, I think my take on it is it's probably just like a company that hasn't, it's not probably not growing a ton, has a large amount of volume, doesn't do great on like marketing and growth. And Stripe obviously is like the new, it's kind of like the dominant, I would say, headline kind of market leader now in this payment space. And they probably feel like it's probably a good value for them at this point because their multiple, I'm sure, is much higher than PayPal. It is so if you could offer some amount of stock, I don't know what the bid is in terms of stock versus cash, but as a former investment banker, what I can tell you is if you're buying something cheap and your stock is more expensive, then it's accretive or it's beneficial for you because you're buying more earnings and revenue at a much cheaper price than what your current company is worth. So it could be just a very good strategic acquisition for Stripe.
I mean, Ian, when I was looking at this story, I was kind of thinking in my mind that does this create a precedent for companies that are private that can do deals like this to just continue to stay private longer? Right? I mean, like, I think it would be really difficult for Stripe to do this deal if it were a publicly traded company because probably there's some sort of antitrust stuff that get triggered, all sorts of governance problems and so forth. As a private company, maybe they can pull this off with a lot less oversight. But I don't love the fact that like if they can pull things like this off, then Stripe's just going to remain private for another 10 years or something. And I mean, do you see this as a new normal?
Well, I think you know, that's the trend these days. Stripe can stay. I mean, any company can stay private longer as long as they make money and they're actually helping their employees sell their shares through secondary. The company buys back, or other people like the market actually buys their secondaries too, so they can exit. So if you don't have to be on, if you don't have extra money or liquidations for your employees and investors, maybe you don't have to be public. So I think that's a good strategy too. One thing that's really interesting to me is like I see Stripe as more of infrastructure for merchants and sellers, more B2B side, and PayPal is on the B2C side, and PayPal owns Venmo too. So if they get acquired by Stripe, it's gonna be one of the largest payment network, you know, taking care of. I think it's $3 to $4 trillion. So it's the largest payment network. And PayPal, I mean, we don't use PayPal a lot. We use mostly Venmo here, but then PayPal is still really easy way to send money across the countries. And if Stripe, I mean, I think Stripe is doing also some stable coin businesses. That's going to enable the customers to send money overseas really easily and fast. So this becomes the network for payments for everybody or anywhere, anything or in anywhere. So I think that there is a really good upside for Stripe to buy PayPal, not just becoming getting the multiples and all that kind of stuff, but as just a functioning company. There's going to be a lot of synergies for them to buy or acquire PayPal, and yeah, I think it's a really smart move. Looks like PayPal doesn't like the offer yet, but we'll see how this ends up.
How do you guys view the structure of this deal? Because we're talking about it as Stripe buying PayPal, like everyone is. But then there's this Advent PE firm. So, I mean, is this the way that you do this as a private company in particular, which is, we don't have to work off of entirely our balance sheet to harvest these companies. We should just always JV this thing with another firm. Or actually, I haven't really tracked this very closely. Like, Kevin, is this like a normal way that deals are just always getting done? Is just like you bring in like some third party money to take a slice?
Uh, it's not really that common to be honest. Especially because like a lot of these private equity firms, like they are typically buying majority stakes, right? In these companies. So they use, leverage buyouts. They want to have control over the company. They want to be able to, fix the company and do anything they change out the management team. So typically the private equity LBO playbook is actually just to buy the whole thing and not necessarily partner with anyone. But I have been seeing some of these big PE funds start to do more minority growth investments or partner up with like a strategic, operator, big company like this who actually knows the industry very well. Quite honestly, because I think leverage buyouts in the mega fund, like large scale mega fund buyouts, have just been pretty abysmal over the last few years. We've talked about on this podcast, like how Vista and Thoma Bravo like really shit the bed on a lot of software buyouts investments that they made. It's just been really tough because that market has matured a lot. There's a lot of competition from so many different private equity firms that are doing the same thing with lots of capital backing them. And so I think a lot of these guys are trying to find other strategies that work and, growth investing, minority stake in public company. Like, I think they're trying to try out different things that maybe actually are better money making strategies than what their core strategy was for all these years.
Mm. Uh, It'll be interesting to see whether this is the precedent. I'm really excited about it, but as someone that also has like the tiniest bit of Stripe shares, like I'm like, oh god damn it! Like this, if this works out really well, then we're never gonna see the IPO. I have to like sell all my shares, to, like Ian and Kevin or something, on some sort of like side deal. So TBD. All right. Well, let's go into our last story, which is around fireworks. So this is a really big fundraise that has been happening that happened this week. So fireworks AI in the inference space hits a $17.5 billion valuation. This is an NVIDIA backed startup. Now I want to give some folks, some chingus in the audience, a sense of what inference actually is. And I was actually struggling myself to describe this part of the AI stack really succinctly. So let me read. Okay, to understand inference, it helps compare it to training. I'm just reading off Gemini now, right now. So training, most people understand this. This is the initial one-time phase where a model is fed massive data sets to learn patterns, adjust its internal parameters, and build intelligence. A part of the stack that's been popular for a little while in the last few years. And then inference, this is where it's getting hot. This is the application layer, the production phase, where the finished model applies what it learned to solve the real problems, right? The real world problems. So this is kind of like more of like the execution phase of things. And fireworks is really white hot right now. So I don't know. I mean, like I've been finding, guys, that this whole AI investment boom has been turning into this fascinating pattern, right? It started maybe with like the frontier model companies themselves, and then now I think investors are just picking out discrete parts of the stack, all the way from like energy and raw materials to like training, inference, like all this other stuff, routing. It's hard for me to. I'm of two minds here. One is just like, well, betting on infra is just something that VCs like to do. But there's another side of me that is sort of just like, these mega funds have raised so much freaking money and like are trying to find places to park it. Like, do you think that these businesses on the AI stack justify like valuations at this kind of mediocre rise? Or is it just like these VC funds are just like, oh, I got to park my money here. Let's compete and just like drive with the price. Maybe it could be all of the above. I'll start with you, Ian, to see whether you can make sense of that question.
Well, I'm one of those people who think these AI companies are overvalued, massively overvalued.
I feel that way.
One thing I like about this company is though, if the Kimi models, like open weight models are available and open source models are available, they can just bring that model to this infrastructure and use it up there. So you don't have to be dependent. This actually enables us, you don't have to have the machine in your house, but you can still use their cloud to run your own model and use that for it. So that's great, but everything is crazy and everything's wrong and everything is expensive right now, and it's just too much risk.
Kevin, have you been studying AI inference and like what's going on in this space?
Yeah. So, I mean, inference is obviously, I think, actually where a lot of compute and resources are going to be going for the next couple years because, training is basically what, XAI, Anthropic, OpenAI have been doing for the last 2 years, building these gigantic models like GPT, Fable, et cetera, that require a ton of compute to be able to train the model first, right? But inference is what you need to actually power all the applications, all the software, all the things that the tools that everyone's using nowadays, like requires inference to do. And now, like the demand for inference continues to grow dramatically. So the valuations are very high, but just so you guys are aware, like some of these companies, like I don't know about specifically fireworks, but I've heard some of these companies have grown literally 10x in essentially like a year, right? And they're nearing like billion-dollar revenue businesses. They're basically close to, $500 million to $1 billion in revenues. And so when you actually look at that multiple, 17 and a half billion valuation for fireworks, if you see them getting to like $1 billion revenue or more very quickly, that's actually not a terrible multiple, right? Not a terrible entry multiple relative to public stocks and other companies. And so I actually think because these companies have grown so rapidly, the investment case from a financial multiple and valuation perspective is actually somewhat reasonable. I think the main risk that I see in a lot of other folks that I've talked to see in this inference space is the level of competition and the could lead this to be a bit more of a cyclical type of business, right? Where if there's a ton of, we hear that there's, a lot of new entrants coming in. There's a lot of competitors already, like Base 10, Together AI. I hear that a lot of the large scale hyperscalers are also coming into this and doing other things as well. And I think also the big LLMs like OpenAI and Anthropic are also going to start doing similar businesses as well. You're just going to have potentially a compression of pricing, which means that your margins are going to also get a lot smaller. And it becomes a little bit more like a commodities business where everyone's trying to provide, inference at like the lowest cost, right? And then you're just, race to the bottom. Everyone's hyper competitive on pricing. And that's the fear that we have, I think, as investors, which is how sustainable is this revenue growth? Because there's clearly a bottleneck right now for inference. Like everyone's scrambling to pay as much as they can to get more inference capability. But at some point, if the supply catches up to demand, then we're going to have the opposite issue. Pricing will come down and, revenues could actually plateau or decrease if competition gets super fierce. So that's really like the main concern that I think a lot of investors have.
And I agree with Kevin on that too. Like these data centers and these infrastructures, those are hardwares. It takes some time to build it out. So once we're predicting a lot more inference and everything right now, and if it doesn't meet, if we oversupply, exactly what happened to dot-coms and their copper wires or optical fibers or something, it's just same thing over and over again. And the other thing I'm really concerned about this trend is that I think we're at a point that the improvement in terms of model performance is converging. We're not going to see a lot more improvement. Fable is better, of course, better than 4.8, but it's not like GPT-3 to GPT-4 grade. So the growth is, I mean, the performance improvement is converging. We're not going to see a lot more improvement there. Then the research is going to focus on optimizing and saving money and making faster, smaller, cheaper. So once you get there, there's a two-way pressure. One is like supply is too much and supply build-out is happening. It takes time. So we're going to see a massive supply of these inferencers or chips or hardwares coming in next 3 to 5 years. And then we're seeing this pressure in terms of softwares that we're making the models, less inferences. The one big trend that I'm following right now is making, when you're asking questions to AI, you don't have to use Fable 5 for everything. So if you can handle some of those things with Sonnet 5 or 4, the AI recognize the easier problem and route it to cheaper models and less inferences, and use Fable to, most important part, like planning, but execution is done by Sonnet. By doing that, you're saving a lot of inferences or saving a lot of money too. So if that optimization gets better and better, I think there's a lot more room for improvement on that front compared to the model performance. That means we're gonna have less demand. So less demand, more supply, bubble pops, everybody dies. So that's what I'm expecting next 3 years.
Nature is healing, Ian. That's you just described what evolution looks like, I think. Here's my terrible prediction. I think at the very next YC demo day that we go to, there'll be no less than 10 companies that are working on inference out of that batch. And the race is on. Everyone sees that there's money to be made, so there's going to be plenty of wagons chasing that frontier pretty soon. Actually, already, I guess. All right, guys. I think we kind of did it. We did mention OpenAI and Claude, but we didn't really focus on them, to our credit as much on this episode, and to our chingus out there. We have been listening to your comments that are funneled through Ian, honestly. And we are going to try our best to continue to diversify, I think, the amazing things that are happening in Silicon Valley, because there's so much that's going on. So I think I was the guy that did the sign off last week. I'm pretty sure.
Let's get Ian. Ian, do it.
Yeah.
Ian, go Ian. Ian, you're next.
So I think everybody's crazy in the financial market right now, and VCs are investing like hedge fund. They're not looking into 10-year horizon, they're looking into 3-year horizon, and we suck at stock trading. So I think this is not going to end well, and I hope that doesn't make you think you should be you are a good trader. I think just put your money into ETFs and don't listen to us, because this is not an investment advice.
Wow, that's really fucking good, actually.
Yeah.
Buy the index, ride the
Buy the
beta.
index.
Yeah,
But don't
I
listen
think
to
so.
us about buying the index, because this is not an investment advice. So
A show note for us. I really like what you did there, Ian. Whoever's turn is to sign off, do that kind of final opinion commentary, and then drop the line. It's good. That was good. That was nice. All right, Chingus. Appreciate you guys. That was fun.
Alrighty, peace out. See you guys.